Hello, this is Jordan. This video is being recorded on Monday, June 20th, 2022. Thank you so much for joining me today. Hope you all had a great weekend. Hope all the fathers out there had a great Father's Day. Now, in this video, I'm just going to touch on something that I covered in my premium update over the weekend, and that is the action in some key markets last week, which could indicate a major reversal in not only the inflation trade, but inflation sentiment. And this is something that we've talked about for a while. I mean, we were wrong earlier in the year. Inflation kept rising. We thought it would peak and roll over. And with respect to precious metals, I'm going to link another video in the description. But if you look at the past 6 years or so, precious metals, gold and silver, have kind of been more negatively correlated to inflation. So, in other words, gold and silver have peaked and performed poorly when inflation has been rising. So I've talked about that in one or two past videos. I mean, most recently, you have the bottom in the summer of 2018 in gold and silver when inflation peaked, inflation headed lower, the Fed shifted course, and precious metals were on their way, of course, helped by the COVID crash and all the fiscal stimulus. But they peaked when inflation was just above 1%. So they've been correcting when inflation went up all the way to 8+%. So, and again, I've talked about this in a past video or two, but a peak in inflation and a rollover is important, because if you get a real rollover and sentiment really shifts, while at the same time there's growing concern about recession, that's super bullish for precious metals, because we know in that scenario the Fed has to shift. And so that would be super bullish for gold and silver. So let me get into the chart here. This is a weekly candle chart. We have oil at the top, then the 10-year yield in the middle, the 2-year yield at the bottom. And so let's start with oil. If we look to the right in the thumbnail, you can see that's in the candles, the weekly candles, that's a potential double top. And the move we had last week, that was particularly nasty, where we can see in a weekly sense, 120 was resistance in the last 2 weeks, and oil traded above it in the last couple weeks, got to 123, 124. So failed to close above it, and then you had a move all the way down to about 108. So that is some major technical damage in the chart. You know, natural gas was also down 21% last week. So we can't predict the future, but we can anticipate that last week could have been a potential significant peak in oil. And, you know, looking at other markets, look what happened in bond yields. You have the 10-year yield and the 2-year yield. 3% for both of them is significant multi-year resistance. And if we look what happened last week, let's start with the 10-year yield. So at the end of 2018, it did trade above 3% for several weeks. But we can see that in the last 2 weeks, or in the last week specifically, and this is if you go to the far right and you look at the thumbnails, yields gapped above that major resistance, but then they made a really ugly candle. So you have an open gap with a really ugly reversal candle, where for the 10-year almost traded to as high as 3.5. I mean, it may have, I didn't look at it, but you can see there it ends up closing the week down at 3.25. This chart is not updated for today. It is lower today. And so that sets up the potential for a false breakout there. When you have false moves, the reversal in the other way tends to be pretty fast. So from false moves come fast moves. Great technicians have said that before. Down to the 2-year yield. So going above 3% last week, the highest level since early 2008. So that's a significant breakout. However, we saw the same thing last week. The market gapped up after it broke out, traded all the way up, I think, to 345 or so. This is the 2-year yield, but it ends up closing the week down to 3.17. So the weekly candles in oil and bond yields, which have been trending higher and going together, this has been a big problem for the markets and the economy. weekly candles put in nasty bearish reversals. And, I've been looking for a bear market rally in stocks, the S&P 500. Last week they traded down to the 40-month moving average, which if you look at the past 50, 60 years or so, the 40-month moving average is incredibly important support. So market's really oversold. This is a scenario where the market can bounce. And the reasoning for that, number one, it's really oversold. Positioning, sentiment's really bearish. But number two, if you have this major peak in oil and bond yields are coming down at the same time, that's going to give the fuel for the stock market to rally. And of course, bigger picture, if we're looking out on a 3, 6, 9-month basis, if this is a major peak in inflation, these indicators are rolling over, commodity prices are finally getting hit. In the bigger picture, that is a sign of a recession and the Fed having to shift policy. So here and now in the summer, this is going to be bullish for the stock market, leading to a bear market bounce, because the narrative has been all these things have been causing, inflation, higher rates have been causing the market to sell off. Now you have the scenario where a little short-term narrative can build that inflation has peaked. And so that's going to be enough for a really, really oversold stock market to bounce and, hold up maybe for a couple months, at least the summer. Now, with respect to precious metals, again, if we're looking out past the summer, this is really bullish because it's another indication that inflation is rolling over and the sentiment can shift from we're no longer that worried about inflation. Now the major concern is recession, so then the Fed has to shift policy. If inflation is rolled over, the Fed can shift policy. Look back to my other videos. Look at the history. The Fed shifted policy really quickly during inflationary periods. They started cutting rates when rates of inflation in the CPI were 6, 8, 12, 14%. So that's not out of the ordinary. Last thing, the short term with precious metals, it is a little confusing because gold has held up really well. Silver hasn't. The silver in the stocks, the stocks specifically, they're really, really oversold. They've been more correlated to the stock market. So, we get this reflex rally or this bear market rally on the stock market. The stock market could outperform gold for a month or two. So the question is, are they really oversold gold stocks? Are they going to trend with the stock market, or will they not rally that much because, gold is not going to break out in an environment where we get a bear market rally? Even though in the very big picture, inflation peaking and rolling over is bullish for precious metals. So the short term is at question, but gold stocks are really oversold. I would lean towards, I think they're going to rally with the stock market. Doesn't necessarily mean this week or next, but I would think that's going to be the case over the next month or two. But, that's all. A lot of babbling from me just from one chart. But, guys, the main takeaway here is these market-based indicators of inflation may have put in a nasty peak last week, and so we need to pay attention to this over the coming days and weeks to see if there's a big downside reversal. Short term, this is going to be more bullish for the stock market, but when we zoom out past a couple of months and look, 3, 4, 5, 6 months, if inflation has peaked and rolled over, when the sentiment comes into play that we're in a recession, things are going to get worse for the economy, that's when precious metals are going to get ready to really, really take off. So not quite here yet, but this could be a really good development for gold and precious metals in the bigger picture. Let me know what you think in the comments. Thank you so much for joining me and spending all the time listening to me. Really appreciate it, and I look forward to doing another video for you guys in the days ahead.